Hey, welcome back again. It's the Mohawk Forex scalping team. True scalping, no messing. That's the key. That's our philosophy here. So if you want more information, go to the website www.mohawkforex.com and subscribe to our channel as well. So today, third stream of the week. Why? Because so much of what's going on in the markets is becoming very data dependent, and as we're kind of fundamental and price action traders, then I like to jump in on these bigger news events. And today is the retail sales, as you can see is coming up in about 10 minutes time, and this is big because it's another big data point to give an indication of recession, no recession, recession maybe in the US. So everyone's looking for the employment, GDP, inflation rate, retail sales, oil prices, everything to try and gauge as whether it's an official recession, whether interest rates are going to go higher. So now these data points are more important than ever. So where we were getting small moves on some of these news events before, now we're getting bigger moves. And today was the big one, retail sales. Probably the one you've got to concentrate on is this one here, which is the ex-gas and autos, taking that out of the equation because of the volatility on the gas prices and everything at the moment. So everything's looking to be lower, so obviously for us that could mean some good buys on US30, NAS, sells on the pound dollar, and sells on gold even. So let's see. US30 big sell-off today because of all the news, and of course the big news here in the UK has been 10% inflation figure, as it was predicted to be 9, so double digit. So that's affected a lot of the markets and the bond markets, pushing stocks down. So now we could be in for an afternoon of pullbacks. So we've set up our line here. The retail news is coming out, and that's US30. We've got our trend bars, we've got our RSI scanner, and we're good to go. And we're only trading $1,000 account, so we're going to be sticking with the smallest lot size of 1 on IC Markets, my chosen broker, and that is 10 cents a pip. So we should be able to get 3 or 4 trades away in one session. And also we can do NAS a little bit more, same again. One standard gives me 10 cents, but I only need a margin of 55. So we're going to go in on US30. You can go in on NAS. Let's have a look at the NAS chart. It's pretty much exactly the same. We'll just stick the old Fibonacci back on there. There we go. So again, this is the same. And we'll just put a line across this, so if we don't trade it, we can come back and see how much the news affects NAS as well, if that's your chosen instrument to trade on this. I only try and trade one thing really, and then obviously we'll get a repeat of all the action on the NY Open as well, so it should be a fun day. And so that's, save that, so that's NAS set up as well. Gold, we're set up if you want to be on gold. Gold could potentially come lower, it depends on the result. Let's see. At the moment it's looking to sell. Got a nice sell signal coming off on gold, but again I'm waiting now because we're only a few minutes away. Pound dollar, we had a couple of nice wins on our cable trade this morning, which was good. And we're set up for the New York one as well. Put my New York line in, just waiting for the trigger here, half an hour after the open. Looking good, want this to be lower. So we're going to let the news play out, and then we can see which direction we're going to go in for our final trade of the day, which will be the New York cable trade as we call it. DAX is in the background, but again following pretty much everything that's happening at the moment. I stuck a line in there indicating there is going to be potential pullbacks, but not yet. And so our RSI is firmly in the red and firmly not even in the oversold zone, so there's still plenty of movement this can go down to. You can zoom out and we can see our areas of supply and demand that we've got on the chart as well, our next levels of support. Probably going to be about here, look, bang. So again, but I'm not trading DAX, we're going to be on US30. So, and obviously we're plumbed into Bloomberg as well. As they're getting ready.
Part of the merchandising where people are leveraging up on desires, particularly after 2 years of this. But John, I'd say more than that. The oddest thing here are the margins that are generated and the labor required for these explosive sales. The labor models of these luxury companies are,
and again, they're saying all the markets are waiting for this news. Got about 5 minutes to go, and there's a little speech by the Fed on the NY Open. We've got business inventories at half an hour after, and then we've got our nice EIA oil trade as well, which should be good. And then tonight we've got the Fed minutes. Again, for those of you who are into real true scalping, and I mean in and out, getting the green and out, then you trade this. And usually we trade gold on it as well. You can trade pound dollar maybe, but I usually go in on gold.
Well, we see this with leasing.
And again, we can use our trend lines to help gauge a direction. We don't know where it's going to go because we don't know what's going to be said. So, but for you true scalpers out there, you've got no fear and no stop loss. You've got to go in, get the green and get out. Practice, you know, if you just practice this on a demo account, that's how you've got to do practice any of this. But it's a good one because we know the markets do move. And that's what we want. Movement, quick profits, volatility. That's what we're into. We don't want rangy, slow moving markets with no news. So like I said, we're going on US30, we'll see what this is going to be. Our trends are to the upside at the moment, but RSI is saying no way. We're below our baseline. We've got a little supply and bigger one here. Supply and demand zones, look, as you can see, that automatically, as part of the actual trading system, this is automatic. I don't have to draw anything. All I have to do is basically just wait for the setups to come. And then into the trade, and that's the whole idea behind this. So even though we're looking at the upside, there's nothing here. I want to see the RSI come back into that neutral zone, and if price is below the baseline when that happens, then I know it's just a quick scalp. Like here, look, here we had double trend bar. RSI did not get into the neutral, and as you can see there was no buy, just range and then dropped again. But this is what I like, because when you get the double trend and the break at the RSI, look, there was your buy. You can come out of it once the trend bar goes red again, or you can do the sell when the RSI creeps back in. You've got double red, so that would have been a nice win on the sell. Again, just one green, so you don't enter the buy there. And then once we get two trends and again the RSI break into the neutral, that's another sell. Again, a green here on its own, no buy, that means get ready. There's your re-enter again. So every time you see a red, it's a re-enter for a sell. So basically there were 1, 2, 3, 4, 5, 6, 7, 8, 9 trades on US30 already. If you didn't want to hold one big long one, if you want to scalp, true scalp, there was 9 positions you could have gone back in, because the RSI is just rigid in the red. So that's how we play it. It's fairly easy to follow, and I'm usually in for getting the profits or 10 pips or 100 pips per trade.
About 3% of all the world's CO2 emissions come from shipping. 3% may not sound like a lot.
So here we go. So we've got 30 odd seconds. So good luck everybody. I'm going on 30. We could go in on gold. Quite a few things. Let's see what we get. So we logged into our broker to make sure. Yep. Okay, 20 seconds. We'll see if we get some moves beforehand. Like I said, I don't know if this is going to be a buy or a sell. If all we knew, if everybody knew. So we'll just get rid of that yellow line now. 4 seconds. There we go. Look at it ranging, selling. It's a hammer. It's rejected. It's not doing anything yet. As you can see there, look, we're better than expected. Better than expected. So let's see if we get the reverse on this. As the thunder hits. Okay. Boom, we're done. Yay, there we go. That was it. We took the sell. And that was a nice win. Well done everybody. I hope you got the sell, went the reverse, the news was better than expected, the ex-gas. I managed to get 1, 2, 3, 4, 5, 6 trades, and we got 10, 20, 30, well, probably about $80 on that win. Nice win on US30.
No change in the retail sales figures overall, and the retail sales control group, that one hasn't come in yet, but
and like I say, it was to do with the ex-gas was the one that you wanted, and obviously we know the 30 goes the reverse, so that was the one.
Up 0.7. So I'm guessing, and I'm just going to look quickly here, that gasoline played a big role in this.
There you go.
Gasoline stations down 1.8%. We did see prices fall during the month, and retail sales are calculated in dollar terms. So
and that's it. There you go. There's our first trades cleared for the US, well, pre-US session.
We'll talk a little bit about that on the open coming up. Furniture and home builders up just 0.2% after a bigger gain last month. So it looks like reasonably healthy in some areas. Building materials still up 1.5%.
These are the figures that you want, you see. It's not the main one, it's the one ex-gas. So better than expected. And there you go, we have a drop.
These are the people who are not buying the Balenciagas because they were down 6
Beautiful, beautiful, nice little true scalp there. And a quick $70.
And drinking places. Futures down 0.9 to 1%. Mike on ES&P.
Trend bar gave us the red. RSI dipped down. It was a no-brainer really. It was a fairly easy trade.
36 on a 10-year yield, by 10 basis points.
Let's have a look at NAS. Exactly the same. Just get rid of our yellow line so you can see.
For good reason,
again,
as you just pointed out, that comes in with a decent upside surprise. The control group as well, a decent upside surprise. Mike, is that the right way of looking at this number? Strip out the gas figure month over month?
Yeah, I think that's what the market is doing. The retail control figure, which takes out gasoline and auto.
Exactly what you're saying. Take out the gas prices.
It's up 0.8%.
That's the one.
Those go into GDP and other areas, and of course gasoline prices fell significantly. But the retail control group, which is basically
year on year,
10%, was up reasonably well.
It's 0.7 was the one that's to be looked at. So basically everything was pretty green. That was as expected. So that's when we like to see a drop. Let's see if we can get more way to get another sell. Might be able to get another sell yet on this. NAS as well, we're going to see it break. Let's have a look at gold.
Your coverage in the next hour. We'll break this down on Bloomberg TV as we run towards the opening bow. Tom, looking at yields.
Yeah, look at that gold spike. Beautiful, beautiful. So you should have taken a buy on gold.
Focused on the retail sales number ex gas because of what's happened with gas prices over the last month or so, Tom, and we get a decent upside surprise there.
Yeah, very quickly before our steam gas 210 spread re-inverts down to negative 47 basis points.
Gold, we know pre-market goes the way, so you should have got this buy. Now it'll drop back down, but you could again just wait and see. You know, you've got to wait, line up. We could get another buy on gold if you want to trade gold. Pound dollar, look at that. Woohoo, that was the one that moved probably the best.
How he synthesizes the economic view into the equity belief.
The retail
Michael, I'm not gonna
sales,
mince
look at that
words.
drop.
In my umpteen years of doing this,
As the dollar goes
I've
up.
never seen the raging debate about the stock market linked to the mysteries of our economy.
It's amazing it
Do you
all syncs
feel
together.
the same way?
When the
Do you
Dow
see record uncertainty
goes
out
one
there?
way, the dollar goes the opposite.
Well, Tom, one of the last times I was on in the
Well, it's like the correlation with gold, so
one of my messages for your retail investors was not
So,
to get too
yeah,
negative, even though the S&P
stronger
500 was down almost
dollar
20%.
and
And the reason for that was it's
weaker.
notoriously difficult, probably impossible, to time market bottoms. And what we were seeing with the big decline in equity markets in the first 6 months of the year was mostly a rate shock, the 10-year yield going from 1.5 to almost 3.5%. But we're well off the highs in terms of the 10-year Treasury yield, even though the rates bumped up today with the good data. And the stock market is now up 17+% from the lows. So the first 6 months of the year, the equity market decline really wasn't about negative GDP.
Now markets will
recession,
retrace a little
big
bit.
earnings crash. It was about a valuation adjustment as the 10-year yield.
So let's have a quick look back on
And that
US30.
adjustment is now
Yeah, it
mostly
didn't break.
rearview
It
mirror.
to come lower really,
I look,
ideally.
Michael,
But again,
at the
we
view
want a
forward and
double
the view forward,
trend. Yeah, we
ends
want
with a
both
thud,
to
I
be
believe
red,
it's on Thursday,
and then we
Friday.
could go in. But
Friday
remember, our
next
longer
week,
trend is
Jackson
saying
Hole.
green.
What is Chairman
So it's
Powell
just saying these are
not wanna
pullbacks, so we've got
do
to sell here. If that goes green, we could be buying back
Well,
again.
we've
That's
seen
what I'm
a
thinking for the
bevy of
open.
recent Fed speakers out there with essentially the same message, which is
I'm not
that
going to
they're
be buying while we're
continue
under our
to persist
baseline.
in pushing the front end
I want to see RSI
of the
creep into
curve
that
up,
neutral
being
zone.
policy rates and those rates most closely tied to it. And they're not going to be deterred. They expect some economic slowing, but they want to be very certain that inflation comes down and stays down, and that inflation expectations stay anchored at low levels. So they're going to persist with the rate hikes. They're going to persist at a slower pace, though.
But a nice drop,
And
that's all we need.
what the market has got
Just think
to
about
know,
it, it
and I
was
think
just
that's
here,
the
look.
reason that we've
The
seen
news
this
came
big
out,
equity
went up.
market move off of the lows
15
to
dropped. You had
stabilization
38
along the
pips
curve.
there.
The Fed can do whatever it
Potential.
wants with short rates,
I actually
keeping
set,
long
I
rates
can't remember what I
not
set
go
now.
along with
Was
it.
it 10
So we're
pips per
seeing an
trade?
increasing array of yield curves move into inversion now. And
It
that
could have
is
been
a cautionary
20.
tale about 2023, but I think the mistake that some people made with the yield curve is that
Oh, it was
it's
just
not
5. Sorry, just 5. That's all I went for. There you go. So, yeah, I could have did multiple trades. That still got me nearly $70.
But they're not going to persist there for years and years and years because the
Could have got
economy
more.
will take it.
So, Mike, do you think, though, that the
Look,
easing of financial
it doesn't matter because
policy
we've got
we
more
have seen
trades
are
coming up.
undermining what this Fed is trying to achieve?
And it's
how do you
been a
think
nice
this
day
Fed
so
chair
far.
is going to address some of that
Another,
next week in Jackson Hole?
we're well
that
over
seems to be the
20, we're over
perception of some
20% for the
Fed
day.
speakers that are trying to push pretty hard against this idea of 2023 rate cuts, but they really have no idea what the
So
2023
up next
economy
is
going
the
to look
open.
like. I would say
And again, you
this,
can just check those
financial
results.
conditions are
10,
easing because
0,
credit
4.
spreads are narrowing
So
now
everything
from
better than
highs, and
expected.
rates are off the lows very strongly. Does that warrant more Fed tightening than would otherwise be the case? I would
And that
say
probably
only
means,
if
yes, the Fed
inflation
will persist with
expectations
rate
are
hikes
also
indeed.
rising in sympathy. But bond market inflation expectations are well off the highs and they've recently stabilized. And so I don't think that the recent so-called easing of
Let's
financial
have a look at
conditions
pound dollar,
necessarily means the
which is,
Fed has
this
to
is
be
good
a
for
lot
our
more
trade
aggressive.
for
If
later
they
on.
choose to do so, then certainly that simply amplifies the risks
Retail
of
sales
a
are there. There was our Asian line earlier that we
the
traded.
FOMC's
The two trades we took on
seems
cable,
willing to
and like I
take
say,
here because
we're
they really do want to ensure that inflation comes
again,
down,
we want the RSI
stays
to
down, and that
be in
those
our zone. Like here,
inflation
RSI
expectations stay anchored at low
went back
levels.
into the
Well,
zone.
on
You
the
think
point
there
of
might be a
those
buy
inflation
there, but your
expectations,
two
which
trend
you
bars are
mentioned a
red.
few times
So
now,
it
we
went
know
up
a
a
lot
pip
of
or
that
so and then
caters to the
dropped. So
price of
again,
oil, which
you're
has
just got to
come
wait
down,
for
and
everything
that
to
is
sink. When
reflected
they
in
all
those
sink,
inflation
like here,
expectations
look,
moving lower, and in
here's
the
the
retail
RSI,
sales
first into the
data
neutral
today with
zone,
what we're seeing with the
two
ex-ladder
reds,
gas
so you
and
wait,
control
then it
figures.
crosses
Is
out of the
too
neutral
much
zone and we
predicated
get
on
two
pricing at
greens,
the
and look
pump
what happens,
staying
prices
low when
above
we
our
had the
trend bar,
OPEC new
and away
Secretary
we
General
go.
telling Bloomberg
Just wait for
earlier
everything to
today that
sink
he
with
sees
price
the likelihood
action.
of a supply squeeze this year?
Yeah, it's possible. Those break
And that was, this was Asian. That was in Asian session. We could have had a nice cheeky win, 10 pips or so on the
It's
cable.
not entirely driven by that. So there certainly is some interplay there. I really think the best thing the Fed could do here is
Let's
to
have a
watch
quick look
the
at gold.
evolution of
Gold's
nominal
pulled all the way
spending in
back.
the second half of the year. In the first half,
But in fact, it's gone the way we said of the news. Sorry, it doesn't pull back because obviously we had there was the news.
I think that is going to change because it's not just energy. You see metals
Dropped,
very sharply from
and now it's gone the way of the news. So some manipulation here. Gold always usually goes the way. If it's good news, it will go with it. This is before the market opens, and now you actually, if you'd held your position from that buy,
I think in the second half of the year we're going to see slower.
This is what you've got to be. You know, you should have held your position there.
On the back of tighter monetary policy.
You should have gone long the top of that candle, which is the close when the news came out. Obviously your stop loss would have been below the 0 on the fib, so you wouldn't have been stopped out. And now you would be 20 pips in profit. You'd have peaked out at 27 pips.
On the S&P, but TK, that move in the yield curve still there, up about 8 basis points to the front end on 2s, on 10s. Let's call it 9 basis points higher.
Yeah, I think it's a constructive adjustment, which takes away from.
So if you're doing gold, that would have been my setup on that.
It also shows parts of
If you're using a stop loss, that's where it would be, below the bottom of that fib.
That really affects low income, and that's what we've seen within low income at retail. John, you know we have an international audience. Maria in Brussels sends in a terse email to correct me. It is a surveillance exclusive that Balenciaga, did you know, John? From Spain, Cristobal.
I got the same message, Tom, but I thought you called it Spanish. I thought we called it Spanish.
I think we did, but maybe it was lost in translation.
Where is Maria? I haven't seen her for weeks.
I don't know what she's doing. She's like on sabbatical. She's on Halls.
She's on Halls?
Yeah.
On a long European vacation?
Yeah, Spanish way.
We've got to catch up with Maria today. Is that Spanish, Tom? That's Spanish too.
She's probably looking for me to make an acquisition of balance.
Try and keep out of trouble for the rest of this week. Tom, the data's in now ahead of Jackson Hole. That's kind of it. For them, I wonder what kind of job they think they've got to do when they communicate next week.
I think we're going to get in 5 different flavors data dependency. I mean, that's all they can do. And they have to be data dependent, not because it's theory, John, but because this is an original, all agree this is an original recovery because of a medical disaster. This is not normal analysis.
Mike McKee and I started having the conversation yesterday, Kaylee. Just as a suggestion maybe that this easing of financial conditions is undesirable for them, and perhaps there's going to be a big coordinated effort to push back.
Yeah, it's not what they want to see. They want to see those tighten, and especially for Chairman Powell, who for whatever reason was perceived as dovish in that July press conference, whether or not that was his intention. Does he now try to correct that narrative in a big way next week?
This market hasn't looked back since the middle of June. Kaylee, awesome to have you with us. You back tomorrow?
I am.
Awesome.
All week, John.
And Friday?
Well, that's the reason it doesn't get back. It's a one-day halt.
Bramo's taken a one-day halt, Tom, that turned into a long weekend. She'll be back on Monday.
US30 is back in the zone, and we're back in green. It's a nice supply zone. Is it going to reverse out of here?
JP Morgan, Keith Lerner of Truist Advisors will do all of that as we guide
you to push up. Look, this is the start of the push up. We're going to get back to that supply zone.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans.
It should be 100.
The US not to sail warships
like I say, here's your entry. It's just crept in. So top of that candle. Let's just see if it pushes into our supply zone here.
Said it would send warships and fighter jets through the strait. That is after China responded to House Speaker Nancy Pelosi's trip to Taiwan with a series of military exercises. Now, Goldman Sachs says that a deal to revive the nuclear agreement between Iran, the EU and the US is unlikely to reach.
Probably this time now you get a lot of fake outs. But it's pushing.
Predicted that even if there is a breakthrough, additional oil from Iran won't start to flow until next year. The US is looking at Iran's response to a draft proposal of an agreement. The Hong Kong Stock Exchange is forecasting a pickup in IPOs.
Like I say, here's our supply zone. We're just above our baseline, so
that we have in the pipeline. We've had 16 IPOs in July. That it's a very good performance. Now we had all those IPOs and the pipeline still around that 180. So the pipeline was replenished.
It's the first time RSI has been back into the neutral zone since London Open, and that was a fake out, but look, at the time we had two, we had a red and a green, so it's the first time the trend, the longer trend, has changed and held. And that's what you have to do sometimes, is probably wait for a couple of candles to close if you're unsure about them flipping backwards, especially the shorter term trend. That's the one you expect it to flip, so that's why we have the bigger trend to give us a gauge of the bigger trend. Obviously, it's the whole idea. So it's the first time we've had two greens and pull back into that zone. Look, we haven't had that before. I just want to see if it retests. So if you entered top of that candle, again, you could be looking for that 382 as a longer term, or just back into that zone there.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, you know, we have a unique way that we look at big
You're going to put it just under
I'm
there.
not sure it's right or wrong. It just happens to
It's
be
as
our
if you've got
plan.
to use a stop
And
loss, obviously.
We ask ourselves when we're considering something 4 questions. We ask,
If it goes red, you see now you've got a chance to re-enter
needle in Amazon.
for a
Is it
buy.
being well
That's the way I see it.
Do we have a differentiated approach? And do we have competence there? And if not, can we acquire it quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. You know, and the ultimate output for a company is share price. You know, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level. And that's
Cool,
where
I
we
did it. I
spend
got another $12 there, just on that buy. As soon as the trend bar went red, I put a buy in, set it for 10 pips, and got it. So we'll see if we can get another. We'll just watch and see. Ideally, I want to be the RSI, like I say, going back into the zone.
It had already owned 35% of the insurer. Here's what Apollo gets out of the deal.
Pushing.
Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share...
Remember, our baseline gives us some forms of resistance and support. That's why it's fighting against it, you see, but it's wicked up. Pushed it up nicely. Let's see if we can get another buy. Got 1 minute 30 left on this candle. Like I say, the best position is for RSI to obviously to go green and come out the end of the neutral. So it's an aggressive trade if you're taking a trade here while you're messing around on our baseline. Like I say, our trends are still holding green.
Public company owned or public sector owned that has private sector matching funds. I think that sort of breakthrough has yet to occur in the United States.
He is the chemical engineer of Queensland, greatly associated with Brisbane, where he will lead the Olympic effort of 10 years out. Andrew Livers, you know him from Dow Chemical.
We've got 10 minutes until we get that 30-minute before session kind of move as well.
Interviewed by David Rubenstein. You'll see that tonight at 9 p.m. Peer-to-peer conversations with Mr. Rubenstein, and he joins us this morning to speak of this really.
Nas is doing a similar thing. Look, you can see it's ahead of the game. Pushed up nicely. It's going to put our average RSI line in. Actually, I want to add that to the chart. I took it out here, look, to clean it up. But I actually want to add that. We have an average RSI line, so we can see, and we can add that. It's called the RSI center line, RX. We can add that to the chart. There we go. You can see that RSI is above it. So again, if you're aggressive scalper, you can use that as an entry. Once the RSI crosses the average, say here, look, you had green. Again, it was an entry, potential entry for a counter trend buy. Even though it didn't cross into the neutral, it crossed the average. So sometimes that can be given as a good entry point as well.
And as you note, he is also the chairman of the Olympics for Brisbane in 20.
Again, RSI is now 46, back in the zone.
Right.
We're going to be here for it.
So if it's going to hit our supply zone here, and that's the 236 on the Fibonacci. Slow because the market's not open. This is pre-market.
To build something with this EV company in particular, but David, obviously when we talk about EVs, the comparison always is to Tesla, who in many ways Elon Musk was a first mover on this. How does he see them competing?
This is the reaction to the news and then the pushback.
Tesla is designed to produce cars, I won't say for the average person, they're not inexpensive, but they're not going after the luxury market. At the moment, Lucid is really going after the luxury market. Its cars begin at over $100,000 per vehicle, and they go up from there. They will address the lower cost market later on, but right now they're focused on the upscale market, and that's why they're not directly competing with Tesla.
Well, and of course, the U.S. has been looking at making more investments into the EV infrastructure space. That's part of what we see with the clean energy spending in the Inflation Reduction Act that the president just signed yesterday. What were his thoughts on U.S. infrastructure policy, what it ultimately needs to look like?
Well, Andrew Liveris has been involved in advising several presidents on infrastructure spending, and now that we have a bill, hopefully there'll be appropriations behind the bill. Remember, the bill was only to authorize spending. We have to actually appropriate the money. But assuming it's appropriated, we can begin to redo some of our big bridges and roads and toll roads, airports, and things like that.
Pushing up nicely.
EV cars more accessible too, because they're going to build out a fair amount of electric charging stations throughout the country.
David, I have
brilliant. There we go. Look at that. Back into our zone. Just had to wait. Nice setup. I grabbed another $15–20 there. It was nice.
35,000 employees, and I've never bought the idea that big companies have smooth transitions. It can be as challenging as any. Carlyle Group.
Just see if it hits into that center.
One of the great
into that line.
In smaller projects, hedge funds, alternative investment, private equity, venture capital, is a generational shift. What's your best practice on that? What's the best practice?
Yeah, just clipped it there, look, see.
Move on and do this,
So I took my profit.
You're exceptional.
This comes green, we'll go again.
In our history, how do you make a generational shift?
There's no perfect model. Each of the firms have gone through it in different ways.
That was a nice 3 trades we grabbed on that, and we got, like I say, another $20.
They know the ethos of the organization, and gradually they come in and take over control, and the founders step back. But it's more complicated than a typical situation. So let's suppose you're Lou Gerstner, you're the CEO of IBM, and you retire. When you retire, you don't own 20 or 30% of the company still, and you're not still, a major investor in the funds.
It's rejected off the supply zone, of course, as you'd expect.
All the founders of the large private equity firms are
where
still
people have loaded up sales again.
With some exceptions, still involved in as owners, investment.
Like I say, as soon as I saw it hit the top, we took our profit.
Than the Lou Gerstner situation or Jack Welch situation.
Again, we're still green, so again, if the RSI goes back into the zone, guess what you do? You buy again.
Thanks for those comments, David.
Now we've gone red on our short term. So again, that's another good sign. Let's see how far this drops. We can get rid of this now. It was a nice successful trade. See how it hit the supply zone, you see? Look at that. Just peaked it, beautiful, and then dropped. And that's what you expect. It came here, did it once here, look. It did it twice, 3 times. So the next time it retests this zone, we'll probably get a load of buys.
gas.
the moment we're going down again. If the RSI crosses our average RSI line as well, then we're looking for sells. So while it's above the average, we're just waiting. Got 2 greens still. Again, could be a nice little fake out.
You see the move in the gilt market as a result of 24 basis points on the 2-year.
I'm not going to mince words, Kaylee. I think the double-digit print in Spain was one thing, but a G7 nation with a double-digit
This could retest the 0 even.
at Jackson Hole. Let's remember that's an.
I say we don't want to be looking for sells until we've crossed the average.
Yeah, I wonder who has the easier seat right now. Jerome Powell at the Federal Reserve.
That was a nice little trade. Just shows you even little cheeky trades like that, you can still get yourself $20 per trade. You know, do that 5 times in a day. That's your 100 days, your daily wage. You know what I mean? It's doable as long as you've got the right setup and system. And this is in a slow market before the open.
Over the last 48 hours, we come down to negative 46 basis points, deemed unimaginable really 2, 3, 4 weeks ago, and yet there we are, maybe to come down further inversion through that negative 49 basis point level. Futures at negative 37.
So again, if this pops green, obviously you can look at taking another buy. We've still got a lot of ground to try and make up to get back, because obviously this is the level where I'm thinking, yeah, this is where we want to be heading back to.
Retail sales. Please stay with us on Bloomberg Television and Bloomberg Radio.
You know, our supply zone here. Bang.
Welcome back to another Western and Southern Open update for Bloomberg TV and radio from Tennis Channel. I'm Jamie
Still on
Matthew.
red, green.
Cincinnati said goodbye to a tennis legend as Serena Williams went down to the reigning U.S. Open champion Emma Raducanu.
Yay.
Williams recently announced that she'll retire from tennis after the upcoming U.S. Open. Despite the loss, fans in Cincy gave the 23-time major winner a standing ovation
Well done, Emma.
as she left the court.
To be honest, I was nervous from the first point to the last point because I know what a champion she is. She can come back from any situation, so I really had to stay focused, and yeah, I'm just so pleased that I managed to keep my composure.
Raducanu moves on to face 2-time Aussie Open winner Victoria Azarenka in round 2. And don't forget Tennis Channel's daily live coverage from Cincy starts at 11 a.m. Eastern. I'm Jamie Maggio.
So US30 just ranging around now. Look, we took that little sample trade that we got. We traded the retail news. We've got 3 minutes to about half an hour before the US Open. It's always worth watching because something always moves. Nas did the same look, went back into that supply zone, and then guess what? Boom. People are waiting to sell here. If it crosses the top, they're looking for buys. Waiting at bottom, they're looking for sales. And there you go, you see? Triggered people's sales, and guess what? Price dropped. So it's in the same position as the 30. So that's when the RSI really to creep back in to neutral. It only just got in there, look. I mean, that was a cheeky trade. It really was, but you know, if you don't try. Gold, so a quick look at gold. Yeah, gold hit the TP, so you could have had 275 from the news on that. Look, it smashed it. It's actually creeping higher now, which is what we expect. With green, and green. Look, there's your trigger again. Look, your first one was into the neutral. It's just come out of the neutral zone there on this candle here, and you could have gone again. But again, you've got this supply zone. So your profit is only going to be to there, and then get out of the trade and then wait. With green and green, look, this is looking good. It could be back into the zone, more buys. Just be wary of this supply zone, you see. Again, just small profits, but still enough to get 10 pips. Yeah, look at that. Still, even with a spread and commission, you're still going to come away with a 10 pip win, which is great. Cable is exactly where we need it to be. I want it to be as far away from that NY line as possible to trigger a trade later on. So that's looking good. So back to 30. There you go. Look, it's exactly what we said. It's bounced up. We've not put a buy position in yet. RSI still hanging in the red, hasn't been green for such a long time. It was green back here, look, at an hour before London. It's been a down day.
It's a challenging dynamic. This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
So we've got 17 seconds. Let's just see if we get a move on here. Let's just get ready. Let's get ready to put a buy in just in case. Let's just have a look and see. 10 seconds.
Nobody covers the Fed.
It's 30 minutes before the open. I always try and see some kind of move. There we go. Look, is it a sell?
Stock that is now up about 45%. A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
Just sort of dropped off. Just weird. Pushing back.
To bring you exclusive global insight into cross-asset markets.
RSI is 41. Could drop. I'm tempted to take a buy, but I don't. I'm just going to sit on my hands and wait. That's what you got to do.
Yields are up, stocks are down. On the S&P, we're down about 0.9% this morning. Good morning, good morning. The countdown
Good morning,
to the
good
open
morning.
starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg.
We're counting down to the open.
Jonathan Farrow.
Again, what we'll do now is, yeah, it's just ranging now. Look, so I'll mark out a zone on NAS as well, because we'll probably trade this on the open
Right from
today.
New York City, we begin with the big issue, the tug of war over financial conditions.
The easing of financial conditions.
Most of that occurred in equities. Markets are completely ignoring Fed speakers.
Even the most dovish Fed officials have been very hawkish.
So we're going to set a little range, like I say, just before, an hour before the open, and then the open is here. Just create a little breakout zone again, not always for breakout, just so I know I've got areas where price likes to retest. Again, the lowest point is there at the moment.
The roadmap is let's tighten the line.
So we've got a nice little tight zone here. This is better than the last few days. So if we look for breakouts from this low, we're going lower, and this is a high. We're going back up at least to kind of here. Look.
Colliding with this market rally. Pretty much everyone we're hearing from this morning is saying don't chase it. Are you saying the same thing?
We are. I think when it comes to the Fed and thinking through this recent tightening in financial conditions, we have to remember that that's the opposite of what they want to see. And they've really de-emphasized forecasts and are very much living in the now. To boot, this labor market resilience, I think, together added with the loosening of financial conditions, could potentially galvanize the Fed's hawkishness, because we all know that their objective is not just to bring inflation down, but to keep it down. And so as such, we don't want investors giving their hopes up about, a meaningful dovish pivot come September, at least not until we hear more coming out of Jackson Hole next week. And so we're approaching this market rally, as a welcome reprieve, but very much with caution.
Well, you're not alone. This morning we're down by 0.9% on the S&P. Off the lows of June, we're up by about 17.5%. And here's the pushback from Citi, who say we would say that tactically selling into further strength is justified. Citi aren't alone. Here's UBS and Mark Hayfully this morning. While more favourable inflation data takes some pressure off the Fed to hike rates aggressively, talk of a policy pivot is premature. We would caution investors against chasing this rally. Peter Cheer, are you on board with that theme?
Yeah, generally, we've been trying to trade this with options from both sides. Just you see things like these meme stocks coming back, so it's very hard to stay in front, step in front of the freight train that's been going higher. I would say all else being equal now, I want to turn more bearish. I think we're going to get Fed minutes that push down on it. And two things that I'm watching, though, on the data front is this inventory build concerns me. And we saw in Chinese data that their exports plummeted, which tells me that confirms we've built up too much inventory here. And that's going to be a problem in the coming months.
Peter, are we working through that inventory story already? We heard from Target a little bit earlier this morning. We'll talk about that later. But what's your early take on that?
I think we are just starting to it. You take a look at some of these companies that IPO, there were grill companies. There are all sorts of companies that made basic things. They IPO'd in the last year. They're all down anywhere from 50 to 80%. So I think we have not yet seen this capitulation where people really have to discount things, and I think that's coming.
Futures down off the back of some of the retail sales numbers this morning. We're down about 1% on the Nasdaq. On the S&P, we're down about 0.9%. Let me be clear. It is not just the retail sales number this morning, it's about an upside surprise on UK CPI and a monster move at the front end of the yield curve in the UK. Yields higher in the UK, in Germany, in the US, on treasuries. 10-year yields up by around about 6 basis points on a 2-year.
I had all this
by 7. What a touch base with Mike McKee to break down the number. Mike McKee, you said it repeatedly over the last couple of days. It will be about retail sales ex gas. What do you see?
Yeah.
Oh, that's pretty much it, John. The interesting thing is almost all the gains in the core sales and in the headline come from non-store retailers. That's not broken down by product category, but it does suggest that people went back to the internet to go shopping in July. Department stores and other retailers that would sell back-to-school stuff didn't do so well. So it'll be interesting to see how the Fed interprets it. Now, we have said over the past couple of weeks that the bond market and even the stock market are going to be all about volatility. You take a look
And we
there,
can put a little range, a little breakout setup, around US30 as well if you want. Again, just drop a couple of lines in here, look.
For the market is
and just
what do they think
box it off.
The Fed is going to do? You look at what the Fed's accomplished
Again,
so
the
far.
supply zone, so again, no surprise there. That's the high, and of course the low is the Fibonacci. So again, you know, just gives you an extra little confidence that if price does break this zone, because the Fib will stretch out, then you're going down lower, and obviously we know if we retest this supply zone again, we're probably coming back up to kind of a 382 level. So again, I'm going to put a line in just below there as a potential TP if we come back up. And again, that is 80 pips, that would do nicely. But we're mixed on our trend, and RSI still rooted below our neutral zone, so there's nothing happening as we'd expect right now.
At that time, we hadn't even had the good
Just gonna
jobs
get rid of that.
report, let
Don't
alone
need that on
the
the chart.
decline in inflation and all the other numbers that we've had since then that make it really hard to get a reading on this economy. So whatever they were
really need
thinking
that on the chart at the
3 or 4
moment
weeks ago on the
because
27th of
you
June,
can see it
they've probably had to refine
on
that by now.
382. We've created a nice little breakout zone though for US30.
Nice upside surprise on retail sales as you strip out the gas story, as Mike McKee has done. Evercore talked about this tug of war, this battle over financial conditions earlier this week. This is what they said. Right now the Fed is losing. They will
Like I say, for those of you who want to do kind of orders and stuff and everything, you can always stick the parabolic SAR on there, the indicator I really like. And again, if you're looking to take a buy, then you wouldn't add 1 or 2 dots. You want to be setting the level. So basically, exactly where I've put my breakout is where you could set a pending order for, if you want, if you like that, for a buy. Obviously, you want to make sure it's not a fake out. That's the only thing with setting pending orders like that. So you could, if you wanted, you've got, if it's zoom in, you've got all the red dots. What you can do, just try and zoom in so you can see. Here we go. Just get rid of the fib.
From incoming inflation data, retail sales anecdotes, etc. I think the market will continue to do that. But all in all,
so what you can do if you want to do a, you know, usually if you're doing the SAR, it's usually if you get a green dot, then obviously you don't enter till prices cross the first. But if you're to avoid fake outs, you probably want to set it above, set it here above the last dot.
Over the last 8 weeks.
So you could set a pending order there for buys. If you get a green dot appear here, then that's what you can do. That's the safer method I would do, rather than setting it on the first dot, which people do, and I've done. But like I say, you can get it wicking, triggering your order, and then it'll reverse against you. So if you go to the last dot, then that's a good area to set as a trigger for a buy. And reverse the same again with the sell as well, exactly the same. So let's move this back to where the high was, which was there. Just get rid of the dots.
Peter Cheer, high yield spreads are at 413.
We're back in the zone, we're back in the zone. Oh, it's gone for a buy.
I certainly like the double B part of high yield. I like investment grade credit as well. I think we are going to see this shift where people want yield, so long duration bonds should be interesting. I think the weaker end, the triple C's have had a great run between that and leveraged loans. I think there's something you want to take advantage of, this really nice rally and sell down. You want to be in core fixed income. You want to own investment grade. You want some duration. I
Got
think
a
you're
double
going to see
trend.
people
We've
continue
got
to buy yield
RSI
stocks on
crept into the neutral
side.
zone.
You've got opportunities
It
to
gets out of the neutral zone, and
yield
it's
type
coming back
equities.
up to
And at the
test
other
the
extreme, I like
supply.
emerging markets, because I do think the Fed is actually going to have to stop the hiking sooner than later, and the market is priced in way too much of a soft
That's a
landing
nice move.
scenario.
That's
I
kind
think
of the
we're
move
still
I
much
was
more likely
looking
to see a
for
hard
too.
landing, and that's not being
It's
priced in right now.
at
So
9
Pete,
minutes.
that's a
It's gone done by
important
9
note.
minutes later.
There's a
Still a nice
difference
move.
between the weakness being avoidable and the weakness being delayed. Do you think the weakness is being delayed, or do you think people are just ignoring what you're seeing?
I think we're already seeing more weakness, and we're kind of ignoring some of it. Even on the jobs data, right? We keep talking about the establishment number, which is the headline. There's now a almost 2
Beautiful. Can
million
that move
difference
up?
over the past 4 months between the household and the establishment data. So there's all sorts of pesky little things that are bothering me in the data. I think we could see much greater weakness in the
An
next 2
area
months
of, as you
than
can
is
see, top of
expected.
those
And some of
candles
that's
there.
probably already there and is not being picked up well.
Well, I'm just struggling to get a clean read on things, Elise. Pete's seeing maybe some weakness in the US economy. I see some strength in
Candles
payrolls for a
finished
moment,
now
although I
above our
take this point,
baseline.
it's an important one.
You
And
see
then
it's
you
gone
empire
green.
manufacturing tremendously weak, then CPI softer, and from one data point to the next data point, the narrative seems to shift from a weak economy to a strong economy, to a Fed that needs to do more, to a Fed that needs to do less. Where are you on this US economy right now, Elise?
This is the big debate, right? I mean, we are calling the odds of a recession happening in the next 12 months.
Created our little breakout zone.
Flip for this very reason. I wanted to tag on the conversation around yield-seeking behavior as well, because given some of the strain that we're anticipating within the high yield space, for those kinds of investors who want that higher income generation, we would much prefer that they look somewhere like the preferreds market, where you're getting investment grade quality issuers, and also a touch of duration while still getting that meaningful pickup over IG.
Equities down this morning by 0.8%. We recovered just a little bit. Yields are higher.
And it's right at
6
our
basis
baseline.
points
It's
on a 2-year.
fighting that
332. Yields
resistance on the
have
baseline, as you can see.
over the last month or so, last couple of weeks, given
And it's
where
flat.
we were in the middle of June. Just remember that yields peaked 2 days before the equity market bottomed on a 2-year at about 345. Then yields faded, real yields faded, and the equity market was off to the races. More recently, yields are starting to climb just a little bit again at the front end. Your 2-year up 6 basis points to, let's call it 332. That's the price action. Elise and Pete are going to stick with us into the opening bell. Let's get you some movers. We can catch up with Abigail. Hey, Abby.
Hey, John. Well, we actually have some breaking news crossing the Bloomberg terminal not so long ago. The red head that Genesis, the privately held digital asset prime brokerage, the CEO, Michael Moore, stepping down as the crypto broker has slashed its workforce by 20%. They were stung by exposure to the bankrupt hedge fund Three Arrows Capital and, of course, the broad market downturn in the crypto space. And it's interesting, if you go to their website, it sort of looks like they're preparing to go public. There's lots of links to the SEC and FINRA and SIPC.
Another crypto company struggling. Wow. No
Again,
surprise at the moment.
Michael Moore, the CEO at Genesis, the privately held crypto broker, has stepped down as they slash their brokerage. As for some of the big movers, we of course
So we're getting ready for the open. We've got about 15 minutes to go.
The better-than-feared results have created a bounce. The CEO, of course, said that the sales trends are improving and they see earnings at the top end of the range, stock off of its highs, but nonetheless higher. Target, on the other hand, down by about 2.8%. They missed the lowest estimates, saying that the rebound is coming, but their profit continues to be hit by slashing prices to move that inventory out. As for big tech, John, you know that we, of course, have yields higher on the day. That is hurting Microsoft, NVIDIA, and other big tech giants. This making valuation more expensive. These stocks look more expensive as yields go higher. NVIDIA, also B of A, out with an interesting idea that last week's bearish pre-announcement helped, but NVIDIA would be helped out even more if they cut guidance again. That would, quote
So a
unquote,
quick look
clear
at
the deck.
NAS, yeah, tight in the box, which is really nice.
Target signals the inventory pain.
Gold we're leaving alone now.
Every single
Pound dollar, yet again, is exactly where we need to be. I want it to stay around this line here so we can have a sweep back up, so that's looking good. So yeah, everything's looking a good setup. And US30, we've created our box, which is zoomed in again. See it range around for the next 15 minutes. Our longer term trend bar, as you see, is still green. Let's see if RSI goes back into the zone. Got 1 minute left, 50 seconds left on this candle.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells. No one gets much benefit.
Imagine a resident of Port Harcourt who
Got 8 seconds left on this candle.
for hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Entering at the bottom of that candle, let's see.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You will shed light on dark matter. You will
Pushing
make
back
adventure
again.
optional.
It's good to watch this. You can trade a little range.
You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City
All roads
Fed's
lead to Jackson Hole,
2022
yes.
Economic Policy Symposium.
Can't wait to trade that.
Bloomberg Surveillance is live as policymakers and financial insiders discuss the economic issues and solutions that keep
Now's this time, look, yeah, it's going to be good to trade this for the open because there's no breakout yet, no movement.
Every single company is talked about the fact that whether it was from late May or early June till mid-July, there are pressure points. The consumer stopped spending. That consumer who basically is below $100,000 income was pressured by rising gas prices. What I'm still hearing from retailers is there's still a mismatch, and we're still going to have certainly more goods available in September or October. Where these are
Got thunderstorms.
I love Dana Towsey, but that Jackson Hole promo is killing me. I think it was Kenny Lyons earlier this morning who said it looked like a promo for the Avengers in Jackson Hole, Wyoming. Anyway, that's Kenny Lyons teasing me a little bit earlier this morning. Equities are down 8 or 9/10%. That was Dana Towsey on Target. I want to talk about Target right now. The numbers falling well short of profit estimates, slashing prices to offload unwanted inventory. The CFO, though, signalling the worst might be behind them. He said the following: the vast majority of our inventory right-sizing costs have already been incurred. We feel really good about our inventory position heading into the back half of the year. Let's get to Taylor Riggs for more. Hey, Taylor.
Inventory, John, for some of the retailers, of course, a key focus. So is, as we talked even about Walmart and Home Depot yesterday, sort of cutting guidance and then coming into this print with lowered expectations already. That is that push-pull narrative that we have in some of the other big movers that we see today. Lowe's, Target as well. Remember, Lowe's, I think, had cut their guidance back in June, actually then managing to beat those. Target, as you mentioned, a little bit of a different story, as we're talking a lot about inventory today. And if there was enough of a cut, enough of a markdown to really set you up nicely for the back half. And that's the big debate amongst analysts on the street. Is another cut coming, or did we really put all of those inventory issues behind us in the first half of the year? There is no better way to talk about inventory than to talk about margins. We had talked a lot about sort of the deflationary, disinflationary effects of writing down some of those prices to clear out that inventory. Inventory actually rose last quarter, so that was one big concern. And in order to clear that out, you're taking some cuts on the top line, doing those markdowns, and that was a big hit that you see to have the margin story on the right-hand side of the screen. We've talked a lot about big box retailer, John, with the Walmart, with the Target. How do we sort of match up? You are looking at maybe price hikes, not so much of a factor here at Target. Same store comp sales, you're still up about 2.6% here for Target. Transactions are up. The average ticket, though, not rising as much, and that maybe is some of the pressures that we continue to see on that margin story. But again, I think going forward, the big story, John, is
See what we can add here. Look, it's a 200, 0 exponential moving average.
Hopefully, we're getting some of that right
If
now.
you need something else to tell you the trend, on a bigger time frame kind of thing.
The outlook from Target in May, had another one in June. And you just get the feeling that maybe this morning this story is starting to become well priced, because when we had negative surprises from Target in the past, you had a collapse in the stock. I think it was back on May 18th, that stock dropped about 25% on that outlook cut. This morning, on a big downside surprise on EPS, we're down just 2.9%. Is the future going to be better? I want to go back to that quote. The vast majority of our inventory right-sizing costs have already been incurred. We feel really good about our inventory position heading into the back half of the year. Peter Cheer, your thoughts on this one? You mentioned it briefly about 15 minutes ago. Do you feel really good about the back half of the year?
Not at all. I think it really comes down
to a nice tight range.
Consumer spending was a function of high gas prices, inflation, and that they can come back. Great. If you think it was the fact that we had stimulus, that you've seen massive wealth destruction, whether it's in housing, whether it's in your portfolios, whether it's in crypto, I think the wealth effect is big. I think there's far less money floating around the system. So I think people are going to have to continue to adjust to a weaker consumer who is not spending as much, regardless of what happens to gasoline prices.
Pete, you saw that news on Genesis about 20 minutes ago. Abby broke it down for us. You've talked a lot and wrote a lot about the wealth effect out of crypto. Pete, is that still unrealized for you, for many people, just from the conversations you have?
Yeah, I think it's still unrealized because people have been trying to still trade this and make their money. They've seen this wealth, but we're back above 23,000 on Bitcoin, so I think people are holding out.
Got another nice little win on that. It was another $10.
You have more wealth destruction, but also it's the jobs that are being lost, and these companies are starting to focus on earnings. So their ability to buy new rigs, new systems, pay service providers is going to decline, and I think that's
bought at the bottom. And like I say, every time the small trend bar goes red, you can just keep entering positions. As long as you're confident the RSI is going to go back into the neutral zone, we can look to take some profits off that. And with just a few minutes to go, you just want to be taking 5 to 10 pips per trade, not holding too long. So let's see if this pushes up a bit more back into the neutral zone. Look.
We go full circle. Trying to get a read on the consumer, I think, is tremendously difficult. When you look at a retailer experiencing inventory problems, that's very different to saying the consumer is weaker. If the consumer is just transitioning from goods to services as we work our way out of a pandemic.
I want to see if we can get some buys on the open as well. Be interesting to see.
And more broadly, to get a gauge of where this economy is.
Not necessarily. I mean, we know the consumer does not feel great right now, but what we do know is that relative to, what you might expect during periods of dire stress, the consumer seems to be holding up just fine. That said, we are not super constructive on the consumer discretionary sector. Instead, we would prefer exposures to areas that have more exposure to things like corporate spending, particularly CapEx, if we're looking at something like the technology sector. But all in all, especially with how strong the labor market still is, even as we kind of see these little tiny cracks starting to form, when you look at things like initial unemployment claims, the picture for the consumer still looks generally okay when we're taking it.
Push up, nice one here. Look.
Maintain a US bias then to your approach with markets on a global basis. Would you maintain a US bias?
We would. We think that the macro risks in Europe in particular are much more elevated than they are in the U.S. And of course, China, with everything going on there, continues to be, relatively an area that we're approaching with caution. So
that's another win. We've got another $12 on that position there. Just post this into the group. So that was 2 cheeky buys on US30. Again, just true scalping using our system.
I think looking a little bit more for Japan. I think some of this tension that we're seeing in Asia is going to actually help Japan.
Bit of focus, that's all it's needed. Like I say, for me, every time the trend bar goes red and I'm looking for the RSI to get back into neutral zone, then that to me is a trigger position to get back in. Once it's green, it's moving. As you can see there, it went. It came back, went red again. We entered again. So we've got 2 more buy positions. I think we're going to retest this supply zone. We will see.
Of JP Morgan. here's a story that we're all trying to stay on top of. After Elon Musk apparently joked about buying Manchester United Football Club,
Yeah,
we can tell you, and this is a real headline, that the Glazers are said to be open to a sale of a minority Manchester United stake. So I'll repeat that. The Glazers, the owners, the current owners of Manchester United, are said to be open to a sale of a minority Manchester United stake. Of course, the timing of this story is pretty interesting considering the joke from Elon Musk was about 12 hours ago. Going to bring you an update on that story.
Nice push-up look again.
A little bit more still to come.
The top out hit the top of them two candles.
Of Truist on why the upside from here for him is limited. That conversation coming up shortly. This is Bloomberg.
Yay! And we've got another cheeky $10. Why not? Again, so we've earned about $100 just trading a range, basically. You see it's coming back to that supply zone. Could have held for a bit more, but yeah, it's risky because you're 5 minutes to go to the open, and now we're going to switch to NAS anyway for the open. Just to switch it up a bit, we can zoom out now and see. That was good. So it just proved that you can trade a range if you know what you're doing and you have the tools to be able to do it, and that's what exactly we have on the X trading system.
And there are scientists who think we could have already built it.
We have the material. We have the
So yeah, we've got no positions open now. They were just nice little true scalps, straight in, trading a range, just following the RSI and our trend indicators. So now let's switch to NAS. Let's see what we can bag on this then. So again, similar kind of setup. The only issue we've got here is the main range is in and out. That's weird. So a very undecided market. That's our longer term setup. As you can see, look, it changed quite a bit, making its mind up. At the moment it's saying selling. We shall see. We've got 3 minutes 30 seconds to go to the open, so good luck everybody as we go in on today on NAS.
4 minutes away from the opening bow this morning. Good morning to you. Futures down about 0.8% on the S&P, negative about 1 full percentage point on the Nasdaq. That's the price action. Here are your morning calls. First up, Credit Suisse upgrading Apple to outperform, highlighting competitive advantages, including its large customer base. That's stock negative about 4/10. Deutsche Bank downgrading Stanley Black & Decker to hold, seeing multiple headwinds.
So if you're trading a smaller account, i.e. anything under, you know, $1,000 or whatever, NAS is a good option. It is with IC markets because you don't need as much margin to trade it. So you can open more positions and you can hold longer for any drawdown and stuff. So we're looking down red at the moment. Look, as you can see.
On Manchester United, and no, it's not about Elon Musk. It's about some real news, and we'll do that in just a moment. This is Bloomberg.
I love that. Let's move the markets. Him joking about buying Man United and shares went up 17%, and now they've actually come out and said they'd be open to an offer. Weird. Right, let's have a look then. We've got a couple of minutes left still. Let's say our setup for cable is looking good for later on. Gold, not really interested at the moment. It's a nice buy, but again it's right tight to this kind of supply zone, so just got to watch out for that if you are trading it. Now this is what we're focused on. Is it going to switch green and we get some tasty buys, or is it going down? Is it going to break out this zone and go lower? And where we're going to aim to? Well, we'll get our fib on the chart and have a look. Get our supply zones on. Here we go. Look, so we've got an area, demand. So this is where we could end up going to.
the satellites have propulsion systems.
And we can take profit on that because that is a couple of 100 points, which is about 20 pips or so. So that will do nicely.
These companies know how to maneuver their machines.
Yeah, we offer
1 minute to go.
service. It's a
We're
subscription
gearing up,
service.
just making sure we're logged in on the right.
Up to 7 days in advance.
Yeah.
If your satellite's going to come dangerously close to a piece of debris or another.
Logged in on US Tech. Yay.
For decades moving,
That's it. Maybe it's half the margin required to trade NAS for the same amount of value pips, 10 cents a pip. So, you know, and you've only got to have a margin of say £55, about $70, as opposed to double that for trading the US30. You know, so always remember that. You get more bang for your buck trading NAS, but obviously it's a volatile fish and doesn't always move as we want it to. So there's many different factors in it, but we'll have a go here. So all looking to the downside at the moment. Let's see this move. We've got our breakout zone kind of mapped out.
So for somebody who's watching this and wants to be a successful global business leader, what are the skill sets?
We're against a supply zone where people might be selling, so
I got the job,
here we go.
was given
Let's
the
see.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg
Let's wait for that green candle, see if it's going to push up anymore.
Radio and the web. This is Bloomberg.
There you go, pushing up nicely, switch to green.
24 seconds away from the opening bell in New York City this morning. Good morning. I promised you the update on that Manchester United story. I'll get that in a few minutes' time. Going into the opening bell, futures negative 0.9% on the S&P, on the Nasdaq down about 1 full percentage point. The story in the bond market off the back of the data is the story in the equity market. There's your opening
So
bell.
that supply zone.
The bond market yields higher.
Let's have a quick look at US30 as well.
Decent. CPI in the UK double digits and yields up 6 or 7 basis points. Your 10-year
Beautiful drop down to that zone.
Yields flying in the UK. In the euro, in the FX market, euro dollar negative about 0.1%, 101.64, and crude up 0.6%, $87 a barrel. Let's get you some moves around the open. Here's Abby.
NAS red again.
A little bit of a
look.
rougher start here for stocks, as you were just outlining. That S&P 500 self down about 0.9%.
Wait for this
The
break.
worst day in about 3 weeks, and a lot of this has to do with selling in big tech. This, of course, as yields are higher, that's pressuring big tech stocks from Alphabet to Intel, among
Got some positions
others.
triggered
Valuation
already.
concerns come back into the forefront. We also have Target down 3.7%. This after they put up a somewhat disappointing quarter. It was a mediocre quarter. They missed.
Just waiting for everything to go green on the screen.
Inventory. The CEO, of course, is talking about a rebound, but investors
So
not
red,
looking at
red,
that
red.
today, especially after Walmart yesterday beat those lowered estimates. And then TJ Maxx companies.
We've already
TJ
had
Maxx
two
companies down 1.2%.
successful
They cut the
sells
full year
on NAS.
forecast.
It's got us
They saw
$20
inflation weigh
there.
into sales. It seems as though the treasure hunt did not happen in the previous quarter, and maybe it won't be happening as much as had been expected for the rest of the year, John.
Abby, sit tight. We'll be back to you in just a moment to catch up on Manchester United. Let's get to those retailers just briefly. Let's get to Taylor Riggs for more. Hey, Taylor.
Yeah, John, as you can see there,
Let's see if we can get any
Target,
more.
Of course, the big one, as we've talked a lot about the inventory write down, the pressure on the margins. Analysts wondering if really that can continue in the second half of the year, or if the worst is indeed behind us. You talked about Lowe's as well, TJX, some of
Just
the
waiting
TJ
to
Maxx
see.
companies. So a little bit of some downside here on this opening bell. We've talked about some of the retail problems everywhere, and I think today, giving the retail sales numbers that we got this morning, a good time to really digest.
Still no
the
breaks,
Walmart,
it's still ranging
Depot,
around.
The Lowe's, the Target, as we've been talking about. And
RSI's into that
just sort of
zone.
big picture doesn't look wonderful. We've talked a lot about the margin misses, the full year EPS.
Not got any more positions open yet. We took a couple. Let's just see if we get a drop.
A little bit short, and then some of the full year cuts.
Oh, it's going to push and break our zones right on that supply zone, you see.
From the big rebound off of some of the gains of mid-June, it really has been discretionary that's leading it up about 30%. They say that the market will lead in many instances some of the fundamentals. In this case, that could be it. Not quite some of the staples, though, that you do wonder with some of the grocery business if a little bit of that is pivoted to the staple sector as well.
Hey, Taylor.
So we'll look at US30. Yeah, US30 is shooting right up. Look at that. As we thought, there was the buy.
Here's another retailer.
I said it
with a
would
bit of a
push
difference.
back
Bed Bath &
on the
Beyond,
open
extending a monster
into that
rally.
smaller
This is a stock
supply
intraday
zone.
of 40%. Kelly Lyons, I've lost count. Where are we now over the last couple of
That was
weeks?
an easy one on
Well,
US30.
we've seen the stock up 15 of the last 16 days, and over those 16 days, the stock is now up more than 500%, John. Literally for no good reason at all, other than it once again has caught the attention of meme traders. They love to say to the moon, but this actually is so astronomical. It's borderline insane. According to data from Vanda Research, the retail trading crowd has pushed $99 million into this stock since July 26. Even as you have analysts downgrading it, saying this valuation is not realistic and the risk reward looks unattractive, they're paying that absolutely no mind. And it's true too for other former meme
US30 just pulling back a little bit, look.
And AMC have been seeing more activity as well, and a collective basket of meme stocks is now up for the 5th week in a row.
Let's watch NAS.
Speculative areas of this equity market
Pushing
that would probably
down.
be left for dead in an environment in which the Federal Reserve is tightening policy, and yet that has proven once again not to be the case. And of course that leads me to the fact that there are losers to this trade as well, some of them on the other end of it, the wrong side of it right now, those short sellers feeling the squeeze in a massive way. Just take a look at the short interest on Bed Bath & Beyond, 44%. That's got to be burning right now, John.
We're doing this all over again, hey Kaylee?
Yeah.
Exciting times. Kelly Lyons, thank you. Difficult times if you're a Manchester United fan, and complex time if you're a Manchester United investor in the last 12 hours or so. The Glazer family signalling interest in selling a minority stake in Manchester United. That's actual news. This coming hours after Elon Musk joked about buying the team and tweeting, quote, "I'm buying Manchester United, you're welcome," following up with, "This is a long-running joke on Twitter, I'm not buying any sports team." Abby, the latest reporting from us away from Elon Musk is anything but a joke.
Yeah, John, this is really interesting, this story and these headlines.
Let's push upon NAS into that zone.
That the Glazer family would consider selling a minority stake in Manchester United. People familiar with the matter saying, and Glazer family, of course, they recently, one estimate putting the family at $4.7 billion worth. They own a lot of real estate, commercial real estate, and of course, sports teams, including this
Waiting for that
minority
break.
stake in the Manchester United, along
So
with
say we've got a nice $20-30 on that open. No positions now, we're just waiting for the big move. This could be it. It's going to break to the top side, or we're going to get some sells and a rejection. US30, nice move on US30.
As you said yesterday, really doing what he does best, creating
Again,
a stir.
tasty little move. And again, another 200 points on that.
Manchester United. Then somebody asked if he was serious, and he, of course, said, no, this is a long-running joke on Twitter. I'm not buying any sports team. Manchester United, though, is higher right now, up 4.1%. At one point, though, it had been up 17% on this. Elon Musk also saying, as you said, stand-up is my side hustle. You know, this Musk factor is just really so interesting here. And it's also really interesting to think about this, John, because he, of course, has had scuffles.
RSI has been green for red for so long. Look, there was your nice trigger buy. So I'll mark this open as a positive to the top side. We've got a couple of sells. Got a couple of buys.
Really interesting, though. You have to take a look at Tesla, John, over the.
So that's the candle you want as your trigger.
2010, up more than.
So let's see, you've got a breakout zone, you see. Let's just see if we get a little pullback.
But it's going to be interesting to see what does happen with the Glazer family being interested in selling its minority stake in Manchester United.
So we've been in and out on our longer term trend bar. So
sports team and it's Manchester United, and then waiting a few hours to tell you that it was a joke is probably not particularly helpful. The Glazer story, though, is fascinating. We already know there's a big American interest in the European football scene and in the Premiership specifically, with the latest being Todd Bowley taking over Chelsea. Just as price is concerned, remember that the Chelsea takeout was about 4.25 billion sterling. What we know from our story is that Manchester United could be valued at about 5 billion sterling, so 6 billion US. If you're looking for some details, and I'm sure as a general interest story or as a Manchester United fan, you'll be interested in whether the Glazers are looking to get rid of control of the club, and we understand that they are not. I'm going to go through the story for you.
Brilliant, and we just got 3 sells on NAS on that pullback.
According to people familiar with the matter, the American Glazer
in that zone, very good. Just post those. It was another $40.
A minority stake. That stock is up by a little more than 4%. I want to get back to the broader market because I know some of you don't like football and call it soccer. Your equity market is down 0.6% on the S&P. On the Nasdaq, was down about 8%.
Just a nice little pullback now.
Keith Lerner of Truist says this: the case for a new bull market is much less clear than the setup coming out of 2020 and that market low. Currently, we still view the near-term risk-reward as less favourable. Let's get to Keith for more. Keith, awesome to catch up. I wouldn't call you a bear. You're certainly not that. You're looking for more upside here, but you think it's limited. Just walk me through your thinking.
Sure, and first of all, great to be with you, Jonathan. You know, if we take a step back to mid-June, back then we were urging our investors not to sell because we had one of the most oversold markets in the last 30 years. And when you were down 24%, you were baking in the median decline around recessions. So what's happened since then? We've had this monster rally back up and 17, 18% as you mentioned. And I think part of the reason why that is, you know, our view is that recession risk wasn't, you know, the first half of this year, it's into next year. So now what we have done is the employment report came out, we revalued higher, inflation has been better than expected, revalued higher, earnings have been better than feared, revalued higher. But now at this level, we have a confluence of technical and fundamental resistance around an 18 multiple and also around the May highs and that 200-day moving average. Sure, you can overshoot because
this move
the
on
one thing
NAS.
that's going good for this market is expectations are still really low and positioning still a bit offside. But, you know, in order for you to say that this market should be at a higher value, I think you have to really be betting strongly on that, you know, that soft landing. And we have the most aggressive global central bank tightening cycle we have in 30 years. I just don't think that should be the base case. So at these levels, we would say if you overweight equities, this would be a good place to trim back. I know that's somewhat of a crowded trade at this point, but we have to go by the evidence here, John. So that's where we stand.
That neutral zone
Talk to me about
cross.
where you would trim, where specifically in this equity market you'd look to come back.
Yeah, well, you know, we still think on a relative basis that the U.S. is in a better position. We have a long-standing overweight to the U.S. because it's also a less cyclical market relative to overseas markets. So we would still be
So look
underweight.
at US30.
Developed international. We cut our exposure.
Yeah, it's pulling back nicely. US30 is as well.
This year, so we still don't like that. And we'd also, at this point, especially on the short end of the curve, where you're above 3% on, say, like a 2-year yield, we think there's some opportunity to increase fixed income because at least yields are productive on the short end as well. And then more on a sector standpoint, John,
Brilliant. We've just got a load of sales on US30 on that push down. Beautiful. RSI crossed into the zone. Let's have a look. Oh, we took a loss. A loss of 41 cents. Damn. So
we still think that has a good kind of demand supply dynamic.
There was that on US30. Switched to it perfectly.
Confuses a lot of people when they hear that we've got this aggressive tightening cycle. We've got these risks to growth. In Europe, we're talking about a recession. In China, we're talking about a
That was another $50 there.
In the United States as well. How does energy hold up in that world, Keith? How does it hold up?
Yeah, normally not very well.
I was looking, just switch screens, saw that drop. Look at that, beautiful. RSI, it's going to, if it breaks our average line, we'll go again on the sells. Like I say, that was a nice little wick down. Jumped in on that.
And it's also a hedge in our view to more of our defensive posturing. So we're thinking about this in a kind of a portfolio/sector composition. So listen, you mentioned that it was complex with Manchester. This is one of the most complex markets that I've seen in the last 20 plus years.
Let's go back to NAS.
But again, I think
oh yeah, it was a beautiful sell on NAS. Look at that. Going to break that zone.
Manchester United, don't worry. I am going to ask you about financial conditions though and tightening cycles. Keith, I think we forget that one of the biggest bubbles that we've ever seen in history, the subprime bubble, was blown up in a world when rates were climbing. And Keith, I just wonder whether this equity market can actually
5 more sells on NAS. We've got another 3, 6, 9, 10, another $20 there. Beautiful in and out on that. We're right against that line. Look, you can see that Fibonacci just slipped down, so I just wanted to be quick on that.
I think the Fed has some scar tissue from what happened over the last year as far as inflation.
Again, nice candle, nice breakout. If it breaks this zone, that's the zone I set from the left, as you can see. And just here, look. And that's why I got out of that trade. RSI's just crossed our average. So this is going to wick up. If it breaks this, we've got 2 minutes to go. This could be the start of the real trend. Just shows you that buy was legit, but was a fake. Fake out from the market. Market tried to push back against all this downside. In the end, it's given up and gone. No. And you can see here, look, our trend bars have confirmed that.
From these spring lows of 2020 are when they heard the same thing over and over again, that we're going to retest the lows, and they missed out on about 20 percentage points of gains, waiting and waiting and waiting.
Got 1 minute 26 to go. Let's see if this is going to push down even
I think it's
more.
starting to kick in a little bit already. Listen, at the 2020 lows, we were urging investors to add to equities and to rebalance the other way, and we just had a price momentum signal, to be candid, that has been very powerful. When you go from indiscriminate selling to indiscriminate buying, we can measure that. That tends to happen after major lows, and that was one of the signals we talked about in 2020. What's holding us back from fully endorsing that signal, Jonathan, is that global central bank tightening is so aggressive, and we have one of the, the yield curve inversion is the deepest since about 2000. So the conditions are different, and you have this momentum on one side, but deteriorating monetary conditions and macro conditions on the other side. And that tells us not to be aggressive and not just to take a signal by itself. But I would say if you're looking for something to hang on to on the bull case, I think it's that price momentum and that FOMO, because everyone's got kind of steamrolled here over the last
Some more
month.
sells there on
Do you
NAS.
think the stage is set for Chairman Powell to push back next week?
Yes, I think it's too premature for him to do anything different. Even if they thought inflation was coming down, why quit now? They want to see inflation squashed, and I don't see any reason why.
Still pushing
even
lower.
if they think the data is softening somewhat.
Keith, awesome to catch up. Don't be a stranger. Let's talk soon. Keith Lerner there of Truist on the latest. He looked for that upside. We've got it. He's starting to get a little bit more cautious as we get closer to 4,300. Right now, 42.67. We're down about 0.8% on the S&P 500. On the Nasdaq, we're down by 1.2%. Coming up, President Biden signing the Inflation Reduction Act into law.
I'm about to sign the Inflation Reduction Act into law, one of the most significant laws in our history. Let me say from the start, with this law, the American people won and the special interests lost.
That conversation up next.
We'll just see what NAS is doing. Beautiful. We're red on the trend bars still.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming through?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources.
Still watching the RSI.
The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
AI
More positions triggered.
Trying to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40
Another position taken, another profit, another 10.
I would have been more or less
10 pips a pop.
to where we are today.
Another 2.
I would have predicted steady linear increase over time, but instead the field had very minimal improvements until the last 5 or 10 years.
2.
Then it really took off. I think we ended up in the right
This
place.
is playing out
but I
really
was very
nicely.
wrong about the trajectory. To this date, we still know very little about how the brain works, but these
There's another
machines are getting ever more powerful.
dozen cells. There we go. Look, just on that. That was another 10, 20, 30, 40, 50, 60, 70. Another 70 bucks there. Gone. 2 trends, still red.
All the things machines can do better than us as what makes us
And
unique
what
in
are
our
we?
human intelligence, then now we can rule out many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September.
Just want to see if we can get a few final trades away and then we're done.
Since the last meeting, but I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
We've not wavered, we've not flinched, and we've not given in. Instead, we're delivering results for the American people. We didn't tear down, we built up, we didn't look back, we looked forward, and today offers further proof that the soul of America is vibrant, the future of America is bright, and the promise of America is real and just beginning.
President Biden signing what they're calling the Inflation Reduction Act as gasoline prices
So
keep
look at
sinking,
US30.
posting their longest downward streak since 2018.
In a range still kind of stuck in our range. Look, you can see that we set a supply zone.
Yeah, certainly is some good news. But Jonathan, as you mentioned earlier in surveillance,
We're getting ready for cable to set up. Our last trade's beautiful. Look at that. It's well away. So we're definitely looking for some buys on cable. We've got a lovely gap here of
you had Senator Sinema really
40 pips. So this is looking promising. We've just got to wait another 10 minutes.
In making sure that the carried interest provision did not go in the bill. So they reneged on that, which is definitely a special interest. But it is some good news for two reasons. One, they were able to show they were able to get this deal over the finish line in the sense that they have been talking about this since the start of the Biden administration. It was called Build Back Better. Now it's called Inflation Reduction Act. It is obviously so much smaller. At one point they were talking about $10 trillion, but it has some wins that they can now go into the midterms campaigning on. And why that is important is because if you look at recent morning consult and political poll, there is a lot of support for things in this bill like lowering prescription drugs and also money to go towards renewables. So this is a huge win for them going into November.
AMH, just quickly, I don't think $4 gets it done at the pump, but is this a conversation that you just don't hear about anymore down in Washington? Have they stopped discussing it?
It's starting to evaporate because people are less concerned with the fact that gasoline is no longer in the hovering around the $5 a gallon range. It is coming down. If you look at the AAA average, it's below $4 a barrel, and in some places it's actually much lower. So when you have gasoline prices coming down, that is giving them a little bit of breathing room, because this for sure was the major concern.
Brilliant.
When we looked at the polls,
and we got some
and
more
obviously one of the biggest components of inflation for
cheeky
everyday
sells
American
on
consumers is energy
US30. Sorry, on
Thank you. Is that a mistake?
NAS as
Talk
well.
about the oil market in this way. We caught up with OPEC's newly appointed Secretary General. Take a listen to what he had to say.
So now we wait
if I may use that term, because spare capacity is becoming scarce, and this is an issue. It's like an insurance policy. We don't want the oil markets to run on without the insurance policy.
Great stuff. So that's the open trade, and we're still waiting for a breakout. Really, this could range again. Like I say, I usually do 2 blocks of kind of trades. I did 4 blocks there on NAS and 1 block on US30, so I kind of overtraded a little bit. But we're okay, and we're 30% up on our account. So hey, that's a great return. Most people have to wait 2 years for that kind of return. So that's pretty. I'm pretty pleased with that.
It's very rarely been as low as it is now.
So now we're just waiting for the cable. So US30, my advice to you guys is wait for a buy on this, a break above our zone here, and RSI to creep out the neutral zone. So that could be the buy you're looking for there.
As rare as hen's teeth, and now they're happening, multiple times a week.
So watch US30 down.
Looming EU sanctions on Russian oil, fears of recession. Will Iran come back as a producer? Will China come back as a consumer?
NAS is in a range, so again you want to wait for the break on NAS.
Where is the Iran story now? It's been in the background for quite a while. Where
Gold
is it?
sold off quite nicely. Again, it's selling again. So if you're trading gold right now, you should be in a sell.
A sort of, take it or leave it. compromise agreement. And if everybody didn't sign up to it,
And
then
we're waiting for this pound dollar. So we've got 6-7 minutes.
The Iranians have responded in a way that
And we'll get these final trades away.
positive. The Americans and
It's looking good. It's sinking quite nicely.
Looking at it, we're expecting a US response any day now. And that will decide whether.
And again, I'm just going to potentially just go for 10 pips per trade on this. I'm not going to be greedy because we've already
that would allow Iran to start exporting its oil again in return for restrictions
taken some nice profit today. So if we can get 10 pips from this kind of position,
hey, Julian, thank you. Julian Lee there.
stop loss is going to be there. We've got 19 pips there.
So the gas story improves. Gasoline prices have come down.
There you go.
And because retail sales are a dollar figure, it is a dollar story, a nominal story. You have to kind of strip gas out to get a decent read, a better read of underlying demand in the economy for the US consumer. Ex-gas and autos, US retail sales were pretty decent this morning, so that adds to the move at the front end of the yield curve. Yields up 9 basis points on a 2-year, 335. Yields up, stocks down. The Nasdaq down by about 1 full percentage point.
Like I said, this could creep even higher. I'm going to set it there.
We'll get you the trading diary in just a moment.
It should go back up to our potential, our Asian line even. And then we'll end our stream for today, because then we're going to be waiting. I've got business inventories news coming up in about 4 minutes time, and we've got the gasoline in half an hour or so, and crude oil. But tonight we'll be back. I'll be back in my group we're going to do a Zoom call, and then we're going to do the FOMC minutes as well, trading gold, to see what we can grab on that. That'll be a good one to try and trade.
More activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent
Again, your green just want RSI really to be coming out the neutral zone to enter the buy.
That's going to allow us to get to net zero targets. This is one of the hardest.
Get rid of that line now, so you can see the candle.
Ultimately, we all want
We're looking for that buy. I'll put the position in now.
As quickly as possible.
Frankly, the scale of
So it's going to bottom out there, look, so just put it just below. And your stop loss is going to be just below the lower these candles here. So we're risking 21 to make potentially 30. It could go a bit more, but I'd say about 30.
Some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Snapping a 3-day winning streak on the S&P. We're down 0.7% on the S&P 500. That's the price action. Here's the trading diary. The latest Fed minutes, 2 Eastern. A host of Fed speak coming up with Governor Bowman at 2:30. Then Esther George and Neil Kashkari on Thursday. Retail earnings continue to roll in. Coles and Ross reporting, followed by existing home sales and another round of jobless claims. From New York City, that does it for me. Thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Post it into the group.
by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil.
So there we go. So we'll let this trade, we'll let that trade take off. See if we can get another 10 to 20 pips. Again, thanks for joining. And please subscribe if you haven't already, so you get notifications of when I'm live. And join me for another stream. For another true scalping stream. So yeah, 32 positions taken, 4 losses in total. Well happy with that. 30% up for the day. That will do nicely. We'll see how this cable trade plays out and show the results into our trading group later on. So yeah, like I say, US30 we're looking for buys. NAS we're also now bouncing back up for buys. Once it breaks this supply and demand zone, that's what we've got to watch out for. This is the big area it's got to try and break over. So it's found its resistance on the bottom of that Fibonacci, so we can take these levels off now because the Fib is holding true. You just want price to break that, or it's going to keep just selling buying until there's a break either down below or above. So watch out for that. And US30 similar, but it's broken that zone, so it should go up now. RSI's come out of the zone. That should be a nice buy up to that 382 Fib level, which is going to get you yeah, it's going to get you 30 odd points, so that could be a good one to watch out for as it creeps back up again. Great stuff. So we just set that up and see if we get an alert, see if we can catch another buy up to that 382 as it's sat on the 236 and we're green all around, so that's good. And like I say, we'll watch our pound dollar trade as well. So great, so thanks for joining. Like I say, if you want information on how to join the group, how to be taught to true scalp, it's www.mohawkforex.com. all the links are in the channel down below. Tell the people about this channel. It's a small channel, small group, we're just doing our own thing and just enjoying what we're doing between the members of the group. If you can also join, just you know, I don't have that many in the group because I try and mentor everyone individually, so it's all about time. But yeah, drop me a line through the website and join us again next week for some more live streaming, and we'll be back doing more. So until then, trade safe, take care everybody, and see you on the next one.